is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I am Alex Tapscott, here with Andrew Young. Andrew, there's a lot of stuff going on in crypto these days. I just saw something come across my news feed that the Clarity Act is being tabled, and hopefully there will be a vote on that this year. That is the big piece of legislation that should clear the way for more crypto adoption and more token issuance in the United States. It's going to hopefully create a framework that will describe and define what tokens are securities, which ones are not securities, deal with market structure and so forth. I think the increasing regulatory clarity has given a lot of big companies and investors quite a lot of comfort around making investments into crypto and Web3. And we've got a lot of stuff like that to talk about this week. So I think for this week's episode, let's just run through some of these big announcements and talk about their significance or lack of significance, depending on your point of view, because some of these things look really splashy, but maybe there's less under the surface, whereas some of the big news might have slipped under the radar. So let's launch right into it. So yesterday, Google announced it was launching an AI agent payment protocol, including support for stablecoins. This comes a few weeks after Google announced it was building its own layer one. So the Google head of Web3 said yesterday that, quote, "If you think stablecoins are just for people, you've missed the plot. Crypto wallets and stablecoins are the optimal technology for agent-to-agent commerce and will unlock trillions in new value for consumers and merchants alike." This sounds familiar because in Q1 of this year, this was kind of a trending topic. I actually even wrote an op-ed about it where I basically said, AI agents, if they become more important in the economy, they're going to need a way to transact, store value, enter into binding agreements, contracts, and so forth. But because they're not people, they can't open a bank account, they can't incorporate a business, and they cannot use a lot of traditional payment tools. But they can have a wallet and they can store stable coins and they can enter smart contracts and they can do all this stuff using the crypto toolkit. So this is what Google's saying. I'm not sure what's happening under the hood, but to me, this is another example of big companies that are embracing crypto their own way. He's the head of Web3, not the head of crypto. He's talking about agents, which has got an AI flavor to it. So even still feels significant. What do you make of this, and what's your take on this intersection of crypto and AI?
Yeah, I think it's interesting. I think AI agents as of today are not sort of ready for prime time. But the thing that is interesting about AI agents to me is, so from the consumer side, I think it's interesting if you think of AI agents as potentially like the new way to interface with the internet, right? So we went from web apps to mobile apps. And maybe like the next approach is actually like an AI first approach where you don't even like bother using web apps or mobile apps directly. You just interface with a ChatGPT or whatever, and the AI agent does stuff for you. So I think that's pretty interesting. Like, so for on our side, obviously we run a prediction market. We have a couple AI agents that actually run on SX, which is kind of cool. It's kind of like a way for people to. It's still very early days, but it's kind of like a way for. It's like a new interface for consumers. Yeah. That's kind of how I think about it. Like we had kind of a similar dynamic last year in the crypto space when there was sort of a craze around Telegram bots. These are like Telegram native applications. So people could like use crypto directly from a messaging app. And to me, AI agents, at least on the consumer side, this is kind of like the next iteration. And so I totally agree with both what you wrote as well as like kind of like Google's push into this. It makes a lot of sense. The second piece.
Yeah. Oh, sorry. Yeah, go ahead. Because I haven't thought of that, but go ahead.
Okay. Well, yes, just really quick. On the second piece, on the B2B side, AI agents are interesting because I guess more long-term, because you could have AI agents working for crypto protocols directly, like maybe the future of crypto governance is not actually having a bunch of humans in a Discord like voting on stuff. You just have like some approved AI agents running the protocol for you. Like it's kind of a way to like decentralize management of like a crypto protocol without having to have like humans involved.
So just a related topic, Albania announced an AI minister, but he's AI. He's not a person. And they did it in Albania. to ensure that this AI agent is beyond corruption. Like this is, you can't corrupt this AI agent. He is going to do right by the Albanian people.
So that,
crypto in Albania. So we haven't entered the mainstream yet, basically, in terms of industries or countries.
So I think AI agents today, at least in the crypto space, are kind of like where DAOs were 4 or 5 years ago. It was like a weird little experiment that people were, playing around with, but it was like not at all ready for prime time. And like most projects weren't DAOs. I actually do think, like, interesting enough, the I forget the name. I really wish I had Trent McConaughey. I think he's the founder of Ocean Protocol. He wrote this really great piece like 7 years ago called AI DAOs. Really recommend people to look at it because it's like incredibly insightful from so long ago. But he essentially kind of like had this vision about how like,
got it.
Yeah, he essentially had this vision about how like in the future, DAOs are going to be run by AI agents, and like that's how you actually decentralize management of like an on-chain organization.
Interesting.
So, anyways, a very random pull from deep in the Medium sort of archives, but I think that's actually a pretty interesting vision. You know what I mean? Like we have crypto projects with DAOs, lots of issues with DAOs, but they also have governance. Next iteration, maybe again, multiple years in the future, is like crypto DAOs with AI agents. So
I think you're right. And I also think that it fits, taking a step back from the crypto part of it, it fits into a broader narrative about how technology eras evolve. So the Web 1 era was accessing the internet using a browser on a desktop computer. And the information you could access was pretty static. You couldn't interact with it. You couldn't upload your own stuff. And then Web 2, the web became social and allowed individuals to share information. And we started using smartphones. And that was the main medium. And instead of browsers, it was mobile applications. You spend most of your time online on, the iPhone app more than X.com on your desktop, or maybe you do both, like I do. Go from the little screen to the big screen. But anyway, now we're in the sort of the third era of the web, if you like, and the software medium I think is becoming clearer. So the software medium is wallets and agents maybe, and the hardware is not, in my opinion. Like most of the like notwithstanding OpenAI hiring Johnny Ive and everyone else trying to come up with new ways to consume the web and use technology, we still basically use smartphones and computers like we have for 20 plus years. And so I'm wondering how that will play out. But I do think that you're absolutely right. Like the idea that, most crypto and most financial and most business processes will be humans interfacing with agents who then go out and do all the stuff. That seems kind of obvious to me. So how we do that, I think, is still the open question. But anyone who could figure that out is going to make $1 trillion. Yeah, go ahead.
What's really interesting about that is in a future where everyone uses AI. Again, I'm not necessarily sure. I like web apps. I get kind of used to them. I think there's kind of like two ways that you could see this playing out. One is user customized interfaces. So, like instead of forcing users to use a certain interface, like maybe the future is like you can customize your own interface, and then because it's built on crypto rails, like you can, you know what I mean? You can build your own interface in a way, like not with code, like just literally point and click in a way. And like maybe this could be a super app because it could like maybe the future of super apps is actually like every single user has their own highly customized super app, because like in a world where everything's built on crypto, you could theoretically be in a situation where like, and like code is incredibly cheap. People could just build their own super apps with the combination of apps that they actually care about, which is kind of a cool way to think about it, right? Like maybe like if everything's on a crypto, if everything's crypto, I mean, I'm just randomly coming up with these ideas, but in a world with like crypto rails, and like, building out your own web app is essentially free with AI. You could be like, hey, I want a super app customized based on my entire chat history with you for these like 10 apps. And like, here's my app usage. So like rank, build the UI based on like how I would like it. And then instead of like me as a web developer trying to like build this one size fits all interface that hopefully everyone can use, I just focus on the back end and whatever. And then like people are accessing it through their own like user customized interfaces.
Yes.
That's kind of like one sci-fi vision of the future. And then again, the second is maybe like is like what we talked about, like AI agent. Like you have your own customized AI agent, and it's just kind of presenting stuff to you like in a chat interface, right? Like you're just doing things through ChatGPT or whatever AI world, whatever AI platform you use, and it's just like presenting options to you, and then you're just like, you're just kind of talking to it, and it's doing stuff for you. You know what I mean? Like,
You know what I kind of think of? It's like, and I think that probably both will exist for a while. It's similar to the rise of YouTube during the era of like linear TV, right? So like linear TV are channels. The channels have programming. You flip the channels, but it's like fixed with whatever the programming is. You can open up your iPhone. There's different applications. Each of those applications is way more customizable than like linear TV. But fundamentally, you're like gated by the rules of that application and the experience that they've created for you. And then YouTube comes along and user generated content and everything. And people start to customize their viewing experience. Like they're not just going to sit and passively watch TV and watch ads and stuff. They're going to like click on stuff they want. They're going to move to other stuff and so forth. And I can imagine like a world where, maybe some early adopters are customizing their web experience through AI, but most people are still using apps. And that maybe, with time, you start to see a shift, but then eventually there's going to be like apps that re-aggregate everyone's experiences back together in the same way that like, Netflix and YouTube are creating much more like TV-like experiences than they used to be. I don't know. It's an idea to kind of tease out, because ultimately the reason I think about it this way is because lots of people would love to like create their own apps, have AI like generate applications for them. Like how cool is that? But not everyone. Like most people will want to be passive recipients of a curated experience that is kind of spoon-fed to them. So I think there's going to be perhaps a little bit of both. Changing topics to something more grounded in the real world. So I started by saying that, the changing regulatory and business climate in the US has made it easier for bigger companies to announce crypto projects. It's also made it easier for crypto projects to do more in the US. And there are two things in particular I wanted to highlight. One, Tether, which you've described as basically like on-chain Eurobonds, effectively like a way to store and move dollars outside of the US versus inside of the US. They have launched this new project USAT, which is the US dollar stablecoin for the US market. And they brought on a guy named Bo Hines to run it. Bo Hines, if the name sounds familiar, was, I think, A16Z, and then he went to the White House where he was like a senior crypto policy advisor. He lasted a few months, and obviously the reason he left is probably because he got this really cool job. So it looks like he'll be taking this on. But that to me is a quite a big signal. And then the other one was the success of some of these prediction markets and raising capital. So prediction markets have gotten a lot more mainstream. I think regulators have gotten a lot more comfortable with them. They are part of the political discourse. They are influencing elections, if not helping people to understand them. And now we're seeing a couple of these big deals happen. Like I think it was Polymarket and Kalshi have both raised money at big multiples, or are raising money at big multiples of what they raised money at only in June. So in June, Polymarket raised $200 million at a $1 billion valuation. Kalshi raised $185 million at a $2 billion valuation. 2.5 months later, both platforms are back in the market. Polymarket is seeking a $9 to $10 billion valuation, so like a 9 to 10x jump, while Kalshi is targeting $5 billion, which is a 2.5x increase. This is in a matter of months. So what do you make of that, Andrew? Like you have a prediction market that is like quite sizable, and I would love to get your point of view on all this.
Yeah, it's interesting. I think so. There's two things to sort of look at here. There's one is this like underlying trend towards on-chain prediction markets, which I guess as of right now, it's really just Polymarket and then SX. And then there's a couple other platforms like I think there's one called Limitless, for example, like Overtime Sports. There's sort of like a bunch of sort of platforms there that I think are like more technology first and sort of like innovating on that side. And then the current like I guess I would call it a little bit of a mania for prediction markets is actually more of like a US phenomenon because like prediction markets have existed for actually quite a long time. Like Betfair, they just called them betting exchanges, so maybe it was just bad branding. but Betfair has existed for like 25 years now, and it's part of Flutter, which is the largest gambling company in the world. So like it's clearly been very successful. The current sort of mania is more around the sort of the U.S. space, and it's because the U.S. has this interesting dynamic where gambling is regulated at the state level. So every individual state has their own rules, as well as like rules and regulations, as well as like costs, and it's a very complicated, like almost kind of Byzantine like market where you have to like each state you have to enter in has different rules. Like it's a bit of a bit of a slog because of that. And essentially prediction markets, you can get like what Kalshi did is they got regulated as by the CFTC. And because of that, the CFTC is like a federal regulator, and that essentially supersedes any individual state law, and essentially allows you to access all 50 states all at once for like as a prediction market, which I think Kalshi's volume is like 85% sports, right? So like it's mostly like they're essentially a sports betting site.
That's so interesting. What about Polymarket? What is
Polymarket? Polymarket is not. I think it's like 40 or 50% sports. It used to be 0, and then now it's like 50%. I think it'll keep trending up. Sports is the biggest category of prediction markets. I also think, I mean, this is more my personal opinion, I think it's the only like actual sustainable vertical within prediction markets.
Yeah.
Like part of the reason why Kalshi, most of their volume's not is sorry, that's my Telegram going crazy. I'm just going to turn it off. The reason why, I think part of the reason why Kalshi's volume is so much is much higher sports is that right now they don't do liquidity incentives the way that Polymarket does. So Polymarket spends about, again, based on their publicly available data, it's about $700,000 a month US in liquidity incentives. The vast majority of which are pointed at non-sports markets. And so, and if you look at Polymarket's like volume chart over time, like in 2023, I think December 2023, they did like $4 million of volume, and then they turned on incentives in January 2024, so like the next month, and it did like 40 or 50 million, and then it was kind of off the races from there. So I guess the question is kind of like, obviously they've grown their user base a lot. You had the election, added a lot of hype. I guess the question is like, are non-sports prediction markets actually sustainable in the absence of liquidity incentives with a fee? That's actually an open question. Like it hasn't been proven out yet. Polymarket and Kalshi is kind of an interesting like A/B test where they don't do liquidity incentives and they do charge a fee, and the vast majority of their volume is sports.
It's sports.
That's interesting. So
it's like a natural market. All else being equal.
I guess like in a little bit of a natural market. I mean,
the product market fit exists for sports and has forever. Betfair, now Kalshi. This is obvious. SX. And
I mean, Polymarket again is interesting because they went after like a crypto native audience. Like, there's differences in the user base between Kalshi and Polymarket. Like Kalshi has access to all 50 states. So sort of naturally, they're just winning the sports betting side. And so, because they're essentially the only platform in the US right now that can access all 50 states all at once, which is pretty incredible. I mean, there's more, that's sort of being challenged right now in the courts. I don't know enough about that, to be honest with you, to like really giving you an opinion. There's also a lot more people who are like Polymarket just bought QCX, which is like a company that had this like CFTC license. So they're going to be operating in the US like pretty much imminently. I would guess like in the next couple of weeks. And there's more that have gotten this. Like I think Railbird is another one. There's a bunch that have this like CFTC license. They're going to be launching in the US. So that's going to turn up the pressure from traditional gambling companies to enter this space and or lobby sort of state regulators to like shut this down because they're accessing the US through this like state by state licensing aspect where there's lots of taxes and there's lots of rules, whereas like prediction markets are just getting access to all 50 states all at once with much better economics, I guess.
So what shouldn't the sports betting sites like be fighting this classification? Because
Yeah,
like
they are. So they're both fighting it and looking to
and also and then co-opt it. Like so every sports betting site can become a prediction market if it means applying at a federal level versus at a state level.
Yeah, well, that's the thing. That's kind of the interesting thing right now is that like sports betting companies, the big sports betting companies don't necessarily know whether to fight this or co-opt it. I would say like right now they're kind of like, because the idea of getting access to all 50 states all at once is really attractive. Like it like boosts
up their model.
Yeah, like
in a way.
So like, I mean,
like
right
can you
now,
offer like sports? Can you offer like sports odds as a prediction market? Like, could you do like money lines? Can you do like over unders? Can you do like all that stuff, spread bets through a prediction market, or is that like considered not? Like, what is a prediction market? It's predicting the future outcome, like including how many points is a team going to get, how many. What's the, like how much is one team going to win by the other over the other one? Like, isn't that all just prediction markets?
I mean, you could do a prediction market on a coin toss. You could start doing prediction markets on casino games. Like it is the future. You're betting on the future of something. Like the thing is everything in any type of bet is a prediction market inherently. Right. You know what I mean? Like, yeah, I mean, like that is the future. That's why it's really interesting. Like it's a lot of, so I guess what I'm trying to say though is there's sort of like, you have to think of prediction markets as sort of from two angles. One is this like on-chain, more technical focused, like building decentralized global prediction markets. That's kind of like one area. And then this other area is like a bit of like a regulatory arbitrage to like get access to all 50 states as like a sports betting company in a way. That's kind of, those are the two areas. Most of the like hype and focus right now is actually on the latter. And that's why when Polymarket bought that company for 112 million or whatever it was, their valuation is like immediately like doubled or tripled. So yeah, I mean, I think that's kind of like, we'll see. I mean, there's a lot of like legal challenges everywhere, obviously, because this is like has huge implications. So yeah, I mean, but right now it's kind of one of those things where, and there's lots of like different state regulators who are, suing, I believe Kalshi and whatever. So like there's like a lot of uncertainty on the regulatory side. I think like part of it is like there's a lot of hype though, and cost of capital is very low. So yeah, you want to beef up and get as big as possible right now so that you can deal with the like I guess the fallout of what shakes
okay.
out.
This is the level of analysis that like I had no idea of, right? Like in my mind it was, hey, the rules are getting a little easier. It's the VC market's returning for crypto projects. There's a revenue narrative, and these are companies that have revenue, and so now they're getting big deals done. But really, you're saying there's like this much bigger picture thing that's going on, which is that like the way in which betting is classified may change and become federalized. In which case, prediction markets, because of their nature, are actually like a step ahead of traditional sports books, and that's creating this really interesting dynamic. Is that like an accurate summary?
Yeah. Like what I'm trying to say is that there's like two trends here. There's this long-term slow building on-chain prediction market trend, or like on-chain sports betting trend, which I'm extremely bullish on. And to be honest with you, SX is focused
it's
on
what
that.
You do. You should talk more about what you do. Like this, like no wonder you're such an authority. This is your business.
Yeah. But anyway, so that to me, that's like the bigger long-term market, because that's like a global, that's like a global, extremely low take rate, frictionless, trustless, permissionless liquidity hub. So I think that's really, really interesting. And that's what we're focused on. Then then you have to also parse the sort of short-term aspect of like market access to all of the US in a world where traditional sports betting companies have to go state by state. I think DraftKings is only in like 25 states, for example. So like this is they're not in California, and they're not in I don't believe they're in Texas either. So like, you know what I mean? Like these, like some of the biggest states in the world, some of the biggest states in the US, you can now get access to. So that's kind of like the other aspect of this. Like calling that US side, to me is more actually a sports betting play in the short term. Like it's being called prediction markets, which sort of partly so that it's easier to be classified under the CFTC license if you're a prediction market, obviously.
Yeah.
Yeah, I mean, that side, to be honest with you, it's a bit more of like a regulatory
Arbitrage.
game, I guess, than
Regulatory.
a technical one. Yeah, it's really interesting. I mean, I've been following it obviously very closely, but like we're not in the US right now. So like there's an angle for, there's more. Polymarket is sort of like the hybrid in a way, because they obviously have this like on-chain prediction market that's global ex-US, and then they're now building like a regulated US version. In a lot of ways, it's kind of similar to how like a couple of years ago, Binance and like I guess FTX had like FTX International, which was like a crypto only, international exchange, and then they had like Binance and FTX US, which was like a segregated, like highly regulated, fiat based crypto exchange. And so in some ways, like the prediction market world is kind of going into that world is going in that way as well.
Interesting. All right. Well, hey, listen, really interesting discussion on that. There's another big piece of news that's happening, obviously today, later on, which is that we're going to get the Fed announcement. We're not talking about that this week because I think there's a lot of really like, frankly, interesting things happening in crypto, and I feel like we can't always just talk about market dynamics and DATs and all the rest of it. But I do want to say that Forward Industries, which is the SOL DAT that was launched last week by Multicoin and Galaxy, I believe, ended up closing that like $1.6 billion deal, and they've just filed for $4 billion ATM to issue more. That hasn't been approved, I don't believe, but obviously they're looking to tap the market to raise more money to buy more SOL. So like we've talked a little bit about this DAT thesis that the fundamentals don't need to change for the price to go up if there's a buyer in the market who can step in and basically absorb any selling and end up pushing it higher. We saw that with Ethereum. We've done all the data analysis. You should please, if you're listening to this, sign up for Digital Asset Digest, our newsletter where we cover all this stuff. Check it out on the website, 9point.com. But this is something that I think is probably going to happen here with SOL. And I wrote it up last week that, like all else being equal, you got Tom Lee going on TV talking about the benefits of Ethereum. Now you have Dan Moorhead and Mike Novogratz on CNBC talking about Solana. And the quote that they've been using, like their line is basically, the Solana network can do more transactions per day than equities, fixed income, and FX combined. Now, what they're saying is that the Solana network's capacity to process transactions is that level. But I think when I first heard it, what I thought they said was the Solana network is doing more individual transactions than all of those industries combined. And I was like, my head almost exploded. I'm like, how could that be true? And it's not. But maybe others think that. But anyway, we're in this interesting moment where you've got some like hitters on TV in the TradFi world that are going on talking about this stuff. So our view basically is that in this environment, probably ETH and SOL both do well, but SOL, given that it's starting from a lower basis and the DATs are only own like they own a smaller percentage of the float relative to the ETHs, that we could see a little bit of a catch-up trade here in those names as well. So wanted to just highlight that. And then one other thing too, which is in the news, which is the US and the UK are deepening their crypto collaboration. So according to the FT, UK Chancellor Rachel Reeves and Scott Bessent were discussing the potential collaboration during a meeting yesterday. I think the president's in the UK for meetings to the potential to set a template for international cooperation in our industry. So sounds pretty half-baked to me. Sounds like an announcement of an announcement of an announcement. But nonetheless, like this is, again, like part of the thesis that we've been talking about, which is the U.S. has been a leader in crypto in spite of the government and policy and regulations, which have not always been very clear and sometimes somewhat hostile. Now that they have the benefit of more clarity, they're going to sort of set the agenda, right, for the rest of the world. And if you're the UK or Canada or Europe or whatever, you ought to be sitting down and figuring out a way to harmonize the regulatory regime somewhat. We don't have to copy paste, but we can't have an environment where, because of the Genius Act, the U.S. has clarity on who can issue stablecoins, and this market can grow and thrive. And in Canada, there's still a lack of clarity today. I think stablecoins are classified as securities because they're contracts for difference if they're held on a centralized exchange. And in other words, it's like a regime that will make it harder, all else being equal, for the asset class to grow. Perhaps that's the point. Maybe they're trying to play it safe. But I think, like, if you look at how it's working in the States, you got to take some lessons from that and try to adopt them. And I think this is an interesting example of how the UK is doing that.
Yeah, that is really interesting. Yeah, I honestly hadn't actually heard of the UK US.
It was just in the morning note that Jake sends around here.
Yeah, it's interesting. I mean, that would make it way easier to be a crypto founder if we could just get like one global set of rules. I mean, it kind of goes back to that whole thing about how the US exports regulations globally, right?
That's right.
Yeah.
Well, that's so funny because like that was the one thing that Europe exported was regulations, but now the US is going to monopolize that too. Because like there was the MiCA rules, and I think everyone thought maybe MiCA was going to be the template. I don't know enough about this topic in Europe, but there was like European regulatory experts. But I think like the UK is not part of Europe technically, and so can adopt the US system, whatever that may be, and it doesn't seem like it's clear at all what that is, and develop sort of a harmonized set of rules. The SEC Commissioner Hester Peirce, who is not the chairman but very influential, had previously proposed a cross-border sandbox where the US and the UK would allow crypto firms to perform certain activities under regulatory oversight for a couple of years. I'm not sure when she made that proposal. Maybe that was in the last administration. I think probably now they're setting their sights on something more ambitious, which is rather than like a sandbox where, like what's a sandbox? It's where little kids go play make believe, right? So instead of a sandbox where you can like goof around, maybe this is just going to become the actual law and make it easier for companies to do cross-border business in crypto. So we'll see. This is table this for a later episode. Maybe we can have the Chancellor of the Exchequer on DeFi Decoded to talk about it.
Yeah. I do want to actually just also on your first point as well on the Solana DATs. I'll take I guess I won't necessarily take the other side, but I'll present the other side, which is
Please
that there's just way less demand for Solana, and so even though like these DATs obviously are huge relative to like the Solana supply, it might be one of those things where it's similar to how the Ethereum DATs, they've been really beneficial to the price of Ethereum, but Ethereum still massively lagged Bitcoin over the last couple of years. And it could be one of those things where Solana, like this helps obviously Solana in the short term, but there's just not that much. There's not like besides kind of those like initial DAT pipes. There's not that much like ongoing demand beyond, and so like it's not as it's maybe more it's a huge initial outlay, but then there's not this sort of continuing ongoing support that there is in the future. Like I think one of the things that made strategy so key was that you had Michael Saylor just go on consistently talking up Bitcoin, right? You had like a founder that you could kind of point to, and Ethereum had that to a way lesser degree, but still a pretty big degree with Tom Lee. Like, who is the Solana DAT Saylor? I guess it's kind of Kyle Samani, but he's a bit more polarizing than Tom Lee. Like, there's a lot of people who, and also just like less well known. Like, so I don't know. Like, I haven't seen
less well known in the mainstream, but also like kind of polarizing is a good term. Like, maybe not as galvanizing in the way that those other guys are. Like, you kind of want to. I just want to root for Tom Lee. Like I see him on TV. I'm like, Tom.
That's what I'm trying to say. Like he's an evangelist, whereas like Kyle is like a Multicoin, which is a really successful crypto hedge fund. But like a lot of people also don't like VCs and crypto hedge funds, and a lot of people also don't like Multicoin specifically because like they've been very outspoken in their support of certain projects, as well as their like they've also been like very outspoken on their kind of
critiques of others.
Critiques of others. So like polarizing is kind of the right word. Like I really appreciate Multicoin's blog. I think it's like one of the best resources. Whenever anyone asks me like, how do I learn about crypto really fast? I say, go read like Multicoin's blog post.
That's high praise.
Yeah. Particularly from like, cause they started in like 2017 and they wrote like a lot of really great articles and like great explainers as well. So I think like they're like, I'm maybe a little bit more positive on them than like the average crypto person, but there's a lot of crypto people who like really do not like multi-coin. I would say.
Well, yeah. Putting that aside, like, I think maybe it'll take a village, right, to do this. Like Dan Moorhead was on TV. Dan's obviously like early adopter, total whale, like amazing venture investor. Not the most charismatic on TV, but Novogratz, boy, he can cook. And Novo was the guy that's what like raised my eyebrows the other day, where it's like he was on TV talking his talk. He was good. So like I think if he keeps going on saying, listen, I worked on Wall Street and Goldman Sachs and the hedge fund world, and I'm a billionaire, and this is the platform I can see Wall Street really adopting because it's got high transaction throughput and it's ready for prime time. And if this tokenization revolution is really going to happen, it's going to happen right here on Solana because it's the only network that can support it. And I know because I am who I am. That's a pretty good pitch. Like I think like if the question is like how he's got a lot of interests, not just this one thing. So is he going to be focused in the same way that that Tom Lee or like Saylor being the archetype, right? Saylor is just like one track mind. I'm not sure we have anybody like that for these vehicles yet, but
yeah,
it takes less to move the ship when the ship is $125 billion versus $2 trillion or $600 billion. So we'll see.
No, I totally agree. I just, I totally agree. I think like, I would just say, yeah, it's one of those things where like it's not as compelling of a pitch in my opinion. I mean, I'm also like more of an Ethereum maxi than the average person, but it's still exactly like as you said, it's still like a pretty good pitch, and obviously the market cap is way smaller, so it doesn't take nearly as much. Yeah. So we're probably going to get to the point though where the next stage after Solana will be like DATs on, Sui, say, like all those types of things. And I just think like the Solana pitch will get like sort of muddled as we go down the line, because there's a lot of like, to me, there's only one Bitcoin, Ethereum, somewhat comparable to Solana, but in a lot of ways it kind of stands on its own. And then there's a lot of like different, super fast chains that are kind of going after the scalability. Solana is obviously winning that right now. But I just think the pitch will sort of get muddled a little bit as we go down the pipeline. I could see Hyperliquid being the next one. I've seen a couple Hyperliquid DATs that have done very well, and it's still relatively unknown. And to me, it's like the only true sort of. Well, I shouldn't say it's the only true. It's the biggest like on-chain like crypto exchange, right? So, yeah, I could see that being like the next one after that really catches. But we'll see.
Yeah. So this is, who knows? Well, here's what I'll say. Everyone wants it to be over so badly. Like, I don't know what is going on in this market. It's like, it's so over is like the dominant narrative, I think. And like, what if it's not over, Andrew? Like, what if the introduction of DATs for these other names doesn't muddle the pitch, but adds like fuel to the fire, and everyone's like, God, I got to put a portfolio together of these different vehicles. Like, how am I going to do that? If this were the 90s, the dot-coms of the current era are the platforms where a lot of this innovation is happening. It's not necessarily happening in the public market. So I'm feeling, maybe I'm talking my own book or taking the hopium, but I just, I don't know. I'm feeling very bullish at the moment on all this stuff.
Yeah.
To be honest.
Yeah, just to add on, I think, we've talked a lot about it, but this has got to be the most hated crypto rally I've ever seen. Like,
that's my point. We actually had a poll. We had a poll. It was like, Bitcoin, what happens first? Bitcoin hits 200K, ETH hits 10 grand, and neither, it's all over. It's so over. And it's so over was second place. It was like 35%. It was like Bitcoin, like there's still Bitcoin people, but it was like, almost a plurality of people were like, it's over, which I thought was really interesting.
No, and that's what's interesting about this is that, again, there's been like virtually I shouldn't say there's been no euphoria, but the periods of euphoria have been so brief in this market. It truly, at least from what I can remember, of like the other two cycles, 2017 and 2021, like this is like, sentiment is not pie in the sky the way it is. Yeah. Like, you know what I mean? Like like people were very bearish on ICOs when they're at their absolute peak, but people were still, people are like, this is going to change the world, blah, blah, blah. Like, whereas right now, like everyone's pretty negative on DATs, even though they like, in a lot of ways, they're more stable than like random ICOs. You know what I mean? It's like a public company that is regulated and, there's like a lot of rules and regulations. Like it's a very different beast than like a random meme coin or whatever. So like, I just think like, I don't know. It's interesting. We'll see. I would have thought we would be nearing the end of this crypto bull market, but just the sheer amount of negative sentiment I see everywhere makes me think that we maybe still, it's still got maybe another 6 months to 12 months left, just because of how, like you said, everyone's incredibly negative on this crypto market, even though like Bitcoin's close to all-time highs. Same with Ethereum. Like, it's just like part of that though is also what we've flagged multiple times about how altcoins have really not done well yet. And so the average crypto owner is massively underweight Bitcoin relative to like the average institutional holder who typically only owns Bitcoin or Ethereum. So there's a lot of like underperformance there that's probably weighing on people's sentiment, at least in the crypto space.
Well, you got to meet the market where it is. And since I think we've talked about this, the wealth effect in crypto, this cycle's happened primarily in Bitcoin, and that's been driven in large part by ETFs, which is in the regulated market. People have their money in brokerage accounts or, on Robinhood and these other platforms. So, I think that's part of the reason why everyone's clamoring to get access to this capital, because it's currently siloed from the crypto market as it stands today. Now, obviously, like last week, it was either last week or the week before, we talked about how this is sort of in a way, the line is blurring between what is crypto, what is stocks, but at least for now, like there's still very clearly a line. So this is why I think you're seeing a lot of this stuff happening. But anyway, I'm bullish. You're always a little more skeptical. That's okay. We'll know more after today when the Fed, cuts rates, surprise rate cut by 2%. No, just kidding. I don't know what's going to happen, obviously. And the expectation, I think, is that they'll resume cuts, but maintain a flexible sort of posture as it relates to what's going on in the market. So we'll see. Anyway, that's a great chat, Andrew. Fascinating as always. Lots of topics to follow up on. We'll dig deeper into this in Digital Asset Digest, the newsletter. So as I said earlier, please make sure to check it out, sign up. If you're listening to this podcast on YouTube, we'll put the link in the show notes. And please don't forget to like, share, and comment on the podcast. It helps others find it and keeps us motivated. All right, that's it for today. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.